Today we will talk to you about a different type of strategy. You may have seen many types of strategies. You have seen different types in different videos, and you have used different types of charts. Today we will present a completely different chart and analyze it. I can definitely say that today's video will be a completely different type of video, and this video will be completely unique. Undoubtedly, today's strategy is very effective, so I request you to watch the video first and then you will understand for yourself. In the video, we will introduce you to a strategy and show you how to analyze and take entries through the chart. So hello viewers, I am an official member of Forex BD. I hope you all are well. We have seen many types of charts in the market like candlestick chart, line chart, bar chart. Also, a few days ago, we gave a video Fibonacci chart. It is a different kind of chart. If you want, you can also use it. So to follow the chart that we will share today, you will first come to the trading view and then click on the candle option above here. You will see chart options and select high and low from it. Those who want to use the Fibonacci chart can use it by clicking on this option. Those who use TradingView can use Fibonacci from here, and those who use the MT4 platform will also get this chart for free. In a video, we talked about Fibonacci. We showed how you set up this indicator on the MT4 platform. It is available on the MT4 platform for free. In today's video, we will talk about high-low chart patterns. Stay tuned. So now let's discuss how to do the analysis. As we have set up this chart, you can definitely see a different chart setup on the screen. Here all the candles are the same color and there are no candle shadows, just highs and lows. We usually use Japanese candlesticks, but the disadvantage of Japanese candlesticks is that there we see different candles from time to time. If the market is in an uptrend, then bearish candlesticks can be seen, and if the market is in a downtrend, then bullish candlesticks can also be seen. That is, there is a mix of candles, which makes it very confusing. Again, because there are many types of patterns in Japanese candles, it becomes very difficult to remember them. That is, we memorize different types of patterns, such as engulfing patterns, harami, doji, etc. These are very difficult to remember. This is why Japanese candles have this problem. But through the chart that we are going to share today, you can do the analysis very easily and you don't have to remember so many patterns, and you can see for yourself that there are no different shapes or different colors like Japanese candles. So here you don't have to remember so many patterns. You can easily analyze through this chart. If you don't believe, watch the video. If we zoom in a bit, you can see that there is no shadow here. The candle here shows the higher and lower prices, and these candles are made based on the maximum value and minimum value. But you will get maximum benefit from here. Here you can do analysis very easily, and you don't have to remember so many patterns. Just remember two things so you can do analysis easily. You need to remember mainly two patterns. One is the bearish pattern and the other is the bullish pattern. So let's discuss the bearish pattern first. For this, you need to follow two candles. Just watch the video with your attention, then you will understand easily. Let's take a look at the bearish pattern first. In the case of a bearish pattern, there will be two candles, but here the second candle will be below the first candle. I repeat that the high and low of the second candle will be below the high and low of the first candle. Right here you can see that this candle is below the previous candle. The high and low of this candle is below the high and low of the previous candle. Then this is a bearish pattern. When you find such a pattern, you will get a signal for the market to go into a downtrend. Now let's see the bullish pattern. As you can see two candles here. The rule for this pattern is that the high and low of the second candle will be above the high and low of the first candle. That is, in case of bullish, the second candle will be above the first candle, but note the high and low of the second candle must be above the first candle. This is the bullish pattern that you see on the screen. Here the high and low of the second candle are above the high and low of the first candle. When you see this pattern, it is a bullish pattern. I hope you understand these two things. If you get a bullish pattern, you should take a buy entry, and if you get a bearish pattern, you should take a sell entry. There are two other patterns such as the engulfing pattern and the inside candle. You must know the engulfing pattern. This pattern is when a candle completely covers the previous candle, then it will be called engulfing candle. As we can see on the screen here, the high and low of the first candle is between the high and low of the second candle, so here we recognize the engulfing candle pattern. The inside candle pattern is that there will be two candles, but the next candle will be within the range of the previous candle. We are showing one on the screen as you can see, but we will mainly take entries following the two patterns shown earlier. Remember, we have shown two patterns in the beginning. One is the bearish pattern and the other one is the bullish pattern. When you see a bearish pattern, it means you prepare for a sell trade, and when you see a bullish pattern, you prepare for a buy trade. But in this case, you should follow another thing, that is, you should keep another thing in mind while taking entry, and that is you should follow support and resistance and take entry. Every time such a pattern may be formed, so when you see this pattern, do not go to take entry, there is a possibility of loss. So if you follow support and resistance to get better confirmation, it will be best and your chances of profit will increase many times. How to follow that? We are showing from the market how you can enter by following this pattern and support and resistance. As you can see in this place, there is a resistance zone. The market has reached this point and turned around and went into a downtrend again. So here we have drawn a resistance line and we can see that there is a bearish pattern right here. We have zoomed in a bit to show it properly. Now you can see that there is a combination of two candles, and the next one is below the previous one. So entry can be easily taken from here. You can take entry from here if you want. You can surely see that the market has gone downtrend. Again, in the same way, you can take a buy entry, so you follow the bullish pattern. As at this place, we are getting a support level, so here we draw a support. Then here you can see a pattern, and here the second candle is above the first candle, and the high and low of the second candle are all above the first candle. So through this, we are getting an indication of the market going into an uptrend, and also, we are getting a support line here. Then from here, buy entry is available. Now you can see the market has gone uptrend. Hope you have understood today's video, and hope you follow this way. That means, take advantage of this indicator and become profitable.
We will make a request to you wherever you create an account, broker house or payment gateway. You must use the forextrading link. This will keep your account safe at all times. You will be able to participate in any type of contest. You will have the opportunity to trade in 0 pips spread. So be sure to account under the link given below. And if you like this video, don't forget to click the like button, because your likes and comments give us confidence to do something better. And if you have any suggestions, you can leave a comment so that forextrading can meet your needs all the time.